So normally you see pretty good action in my experience, in precious metals in September, October, November, and then January and February are usually excellent. If we have no choice but to do that, then that means the precious metals story is way more interesting than it was in those previous two bull markets because, the world's currencies were basically relatively stable during those two bull markets. And so, we had the nice run in gold and silver, and then they peaked, and then they started trending down again, or they plunged in 1980, and they trended down in 2012 through 2019 or so.
Something extraordinary is happening right now in gold and silver. Prices are breaking records, physical inventories are vanishing, and governments worldwide are trapped in debt they can't escape. Analyst John Rubino says this isn't just a typical bull market. It's the possible end of fiat money itself. As central banks flood the system with printed currency, gold and silver are becoming the only assets people still trust. What's coming next could redefine the meaning of money across the world.
In financial markets right now, gold and silver taking off like they have seems to be generating the most headlines. And definitely for me personally, it's the biggest story because I've basically been a gold bug for 25 years now. And it's about time that stackers and other kinds of precious metals fans get the reward for their patience that I think we deserve. So yeah, right now gold is taking off. It's outperforming basically everything else out there, with the exception of silver. Silver is outperforming gold, and on the charts that you've got there, this looks like another precious metals bull market that is similar structurally to the 1970s and to the 2000s, both of which were great times to own gold and silver. I think this time is different in one fundamental way, though, and that is that the fiat currency experiment seems like it might be coming to an end. A lot of big countries, and I include most of Europe and the US and Japan and China on that list, have basically, exploited having a fiat currency, which is to say an unlimited credit card, by borrowing way too much money. And now they're kind of locked in. There's nothing they can do about it. Take France, for an example. They cut themselves very cushy retirement deals. Their versions of Social Security and Medicare are extremely generous. They get to access them at a fairly young age. And a lot of people in France now will make more money during their retirement years than they made during their working years. And that's bankrupting the French government. The French deficit is going through the roof, and every French leader knows this. So whoever becomes prime minister immediately tries for austerity. They try to cut back spending because they know they're heading for a financial cliff. And the people of France immediately hit the streets, get the prime minister kicked out of office. And so they're having a revolving door government now, where the last prime minister named his cabinet and then he resigned like 16 hours later because there was so much blowback. So they're past the point in France where they can actually stop what's coming. They're going to go bankrupt regardless. And it's very obvious there because of all the political turmoil that's following the financial crisis. But it's basically the same everywhere else. Japan has the same problem. China has that problem. Most of the rest of Europe, including Germany, are rapidly going bankrupt. And the U.S., I mean, we've borrowed insane amounts of money, and we're still running, even though it's not a crisis. We're not at war. There's no natural disaster or anything. We're still running $2 trillion a year deficits. And the cost of the interest cost on that debt is going parabolic, which adds to next year's deficit, which in turn increases next year's debt. And we have nothing we can do about that either. There's no way to stop this. Even if the US government tried, the only way they could do it mathematically would be to cut baby boomer entitlements in half. And we won't put up with that. My generation will never accept cuts in benefits, So it's not possible to fix any of this stuff. Now, if that's true, if we're headed for, or we're at a point where governments have no choice but to inflate away their currencies. In other words, finance their ever increasing debt with newly created currency at the cost of the exchange rate of that currency. If we have no choice but to do that, then that means the precious metals story is way more interesting than it was in those previous two bull markets, because the world's currencies were basically relatively stable during those two bull markets. And so we had the nice run in gold and silver, and then they peaked, and then they started trending down again, or they plunged in 1980, and they trended down in 2012 through 2019 or so. In other words, they were kind of a normal market, bull market followed by a bust, followed by long consolidation. It might be very different this time, because if these currencies are in the process of failing, then it's hard to see what the actual upside limit is for gold and silver, because taking it to its logical extreme, if the dollar goes to zero, gold goes to infinity when priced in dollars. So that makes the precious metal story much more interesting, and also harder to analyze, because how do you know when to take profits when the currency that you're pricing your gold and silver in is falling potentially to zero? So I don't have an answer for how to trade this whole thing, but I think there's a decent chance that precious metals are an absolutely epic holding from here on until this thing resolves itself somehow. So I think the people who've been stacking should continue to stack and hold for a long time. Don't think, okay, I doubled my money, I'm gonna cash out 2/3 of my holding. Don't do that in this market. There will be corrections, and some of them will be painful, but think of them as a buy the dip opportunity until the whole currency thing sorts itself out. Bull markets don't go in a straight line. They have spikes and then corrections and consolidations and all of that. And just the general trend is up overall when you zoom out and look at it over a long-term period. And so we could be getting close to a correction in precious metals right now, because it has been in a really exciting few months. That might be a reason to do a few things with your mining stocks. For instance, I have a lot of gold and silver miners, and I've written some covered calls on them, and I sold 10% of a given position a few times to just kind of lighten up on things that have had really nice runs. But also, yes, it's different this time, because this looks like the end of that fiat currency experiment. And in that case, you get the potential for a much longer run. So I would say if you're loaded up on physical, then just ride it. Make that be your generational wealth. Think of your pile of silver coins or gold coins or whatever as something that will bail your grandkids out 30 or 40 years from now when they really need it. So don't think of it as the thing you're trading in and out of it all. Now, with your mining stocks, yeah, you look at a chart like you just showed, and that tells you to lighten up a little bit on some of your more successful positions, and that's reasonable. Taking a little money off the table in an equities position is frequently a really wise thing to do. So you can hold both of those ideas, that gold and silver are overbought right now, and that this time is different, and the ultimate upside is much higher than it was in past bull markets. You can hold both of those ideas in your mind and be right both ways, very possibly. So it just depends from there on what your risk tolerance is and everything, how much you want to take off the table.
John Rubino believes the rally we're witnessing in gold and silver is not a speculative bubble, but a direct response to the collapse of confidence in global currencies. Historically, precious metals tend to perform well from September through February, but this year's surge, he says, is fueled by something much bigger: the unraveling of the monetary system itself. Gold has soared over 52% since January, marking 4 straight record-breaking sessions, while silver has surged more than 8% in a week to reach its highest level in 14 years. Mining stocks have jumped 126% year-to-date, making gold the best-performing sector across the entire S&P. Rubino compares this run to past bull markets like the 1970s and early 2000s, but says this time the stakes are much higher. Back then, currencies were stable. Today, they're in freefall. He points to France as the perfect warning, a country drowning in debt and political unrest. Generous welfare programs, early retirements, and unsustainable spending have bankrupted the system. Every time a new leader attempts austerity, they're forced out of office by mass protests. The same dynamic is unfolding across Japan, China, and the United States, where Washington is running $2 trillion annual deficits even without war or crisis. The interest on that debt is skyrocketing, creating a vicious feedback loop that no government can escape. According to Rubino, the only way out now is to inflate away the problem, to print more money, no matter the cost. But that means the currencies themselves are being sacrificed. If the dollar goes to zero, Rubino warns, gold goes to infinity in dollars. That's why this rally is different. It's not just about profits. It's about survival. For long-term holders, Rubino's advice is simple. Don't sell too early. In a world where money itself is losing value, taking profits in paper currency makes no sense. Instead, see every pullback as a buy-the-dip opportunity. He calls physical gold and silver generational wealth, assets meant to outlast today's broken system. At the same time, the silver market is flashing historic warning signals. Silver is now in backwardation, meaning spot prices are higher than futures, a sign of severe physical shortage. Industrial users, India's massive imports, and military demand are consuming silver faster than mines can produce it. Global stockpiles are dwindling just as silver becomes essential for solar panels, electric vehicles, and defense technology. We're running out, Rubino cautions, adding that once industries realize there's not enough to go around, panic buying will begin. He concludes that this isn't just another price cycle, it's a monetary reckoning. Fiat money is failing, and gold and silver are reasserting themselves as the only true forms of wealth in a world drowning in debt.
Backwardation in a market generally means that physical supplies are really tight. In other words, there are people who are buying it right now. They want it today. They don't want to wait in the futures market, in part because there's some macro thing driving, the need for the material, in this case silver, in the short run, or there's fear that the futures exchanges are going to go bust or default or something like that. And in this case, I think you've got both of those fears out there. For instance, India radically increased its silver buying in the last couple of quarters. They bought much more than they usually buy of silver. And then you've got a lot of industrial users who require silver to make what they're making. And if it looks like silver supplies are going to be tight, while this is happening, silver's in deficit. The mines of the world aren't producing enough silver to cover demand. So we're having to eat into existing above ground stocks in order to satisfy all the demand. So, a lot of the companies that use silver in the products they make could very easily be saying, "Look, my CEO will kill me if we don't have enough silver to make next quarter's quotas, and so I'm just going to buy what I can in the open market right now." And so we stock up. Maybe we have a couple of quarters worth of metal there. So be it. And you might be seeing stuff like that out there, and that might be the reason for the backwardation. And if that's the case, that's phenomenally good for silver. If you've got some really big players out there who can't wait for 1 month in the futures market, then that's a sign that things are tighter than maybe they seem if you're just reading headlines out there. So, and that was always going to happen. Silver was always going to have a squeeze because as long as it's in shortage now, in other words, we're using above ground stocks to cover the deficit that exists in the market, there's always the danger that you just run out. Nobody knows how much extra silver is sitting around in the world that can be used to cover this deficit. And eventually, assuming there's a finite amount of silver out there, and eventually there will be a time it starts to run out and people start panic buying. I'm not saying this is that time, but I'm saying that when that happens, the beginning part of it will kind of look like what's happening right now, where you're in backwardation and the price is going up, and it's just a really favorable market for stackers who have a whole bunch of silver stashed away somewhere. So, whatever happens next, I can't say, obviously, but I think this is a really favorable time to own silver because of the structure of the market and because of the longer term trends and everything else you can think of about it. It's all pointing in the right direction. Well, I think the price contributes to it, because if you see the price going up like this, and you're somebody whose job it is to make sure there's enough silver on hand so General Dynamics can make as many missiles as the government wants or whatever, um, and you see the price going up like this, you start suffering from FOMO, fear of missing out, right? Because you know you're going to eventually have to buy X amount of silver, and you don't want to have to pay twice today's price for it. So maybe you just bite the bullet, pay today's price,
Right.
and put security over profitability for a little while. And because the alternative, actually running out and not being able to make those missiles, that's more catastrophic than just overpaying briefly for a component that's not even that big of a deal per missile or per EV or per solar panel. So I think the price can cause backwardation, in other words, and that could be part of the story today. Nobody announces how much silver is in a given missile, so we don't know exactly how much. There's no way to run a spreadsheet with the information we don't have, but supposedly it's considerable. Supposedly there's a fair amount of silver in a given missile, and the first battle between Iran and Israel, I think, was very important, because Iranian missiles evaded Israeli missile defense systems in a lot of cases. And so I think the rest of the world's military procurers looked at that and said, oh, missiles work. We're going to need more missiles. So probably the whole rest of the world's military industrial complexes chose to increase the number of missiles that they're going to have on hand, since they saw missiles work against a supposedly sophisticated missile defense system. And so that probably increased the demand for silver. And again, that could be part of the cause of backwardation. You've got these militaries out there who are putting in orders, leading the missile makers to not really care what they have to pay to get the orders out the door. And so the result is an extremely tight market. And I don't really see any end to that unless we make peace all of a sudden, and that doesn't seem to be in the cards. And Trump ran as a peacemaker, but he sure is involved in a lot of stuff in the world, if that's his attitude. And it's highly unlikely that a year from now the Middle East is placid and peaceful. And Europe, Europe is the worst actor in the whole geopolitical story right now, because they're actively trying to start a war with Russia, it looks like, and they're probably doing that to distract their people from their domestic mismanagement. But there are very few things that make it worthwhile picking a fight with a nuclear power, and Europe seems to be doing that. And it's just hard to believe that there's any political reality in Germany or France or wherever that makes it worth taking that risk. But there they are doing it. So, bad for most of us, great for silver.
John Rubino's message couldn't be clearer. The age of paper promises is ending, and gold and silver are taking their place as real money once again. If the world's currencies are inflating into oblivion, what's your plan to protect your wealth? Could this be the beginning of a full-scale monetary reset? Drop your thoughts below, and don't forget to like, share, and subscribe for weekly insights on the truth behind the markets. Because what's coming next won't just shake portfolios, it could shake the entire financial world.